Okay, welcome back. Just a quick look at the market as well, because we've seen a bit of a slip. We're down 60 points, and this is the first, in a way, a bit of a decisive move which is appearing. For bulk of the session before this, I mean, the market was flat, 20, 30 points, just about middling away. But now, with a 60-point cut, I mean, it opens up possibilities whether we head a little lower or not. We are almost at yesterday's low. And yesterday was a big candle. I mean, between the high and the low was a big range. The low was 18,060, and we're at about 18,090. That typically, I mean, if you are looking very short term, would be the first reference point that you'd want to go with. That 1860 level holds. So just a couple other points. I mean, what's happening really is that pharma and metals for the second straight day are doing pretty well. We'll talk more about this. The other point is that underlying market breadth, which has, of course, deteriorated a little bit in the last 15 minutes or so, still remains pretty decent, notwithstanding these moves that you're seeing intraday. I mean, the intention and, of course, the impulse has been to try and buy and not sell. What's happening in the U.S. Sort of Treasury futures market is also interesting. The U.S. 2-year, for example, jumped overnight. That is kind of paring back some of those gains. And this is important because the rates market is the most sensitive to Fed pricing, etc. The Chinese stocks are once again firmer. Yesterday, of course, the Hang Seng was up 5. The Hang Seng Tech Index was up some 7, 7.5. There were those rumors about China reopening. And I think maybe the rumors have not gone away completely because Chinese stocks are up once again. And, of course, later today, we have the Fed decision. Are markets really expecting a pivot? I'm not sure. But if they are, I mean, more likely than not, a meaningful pivot perhaps is going to be a very high bar to achieve. Remember, and we've said this before, the market in the US has done very well, 10% in the last 13 trading sessions or so. So it's going in with gains. So any sort of meaningful downshift, perhaps some of it at least is priced in with these gains that we've already seen. And this is a point I was making earlier in the morning as well. 18,092 on the Nifty, about 0.25% or so. Is the change that we have on our hands. Let's come back to specific sectors, etc. And let's talk about auto sales, which have come in for the month of October. Two-wheeler exports and rural markets have seen some pain, but at the same time, players have clocked record high sales in select segments. Sonia is here to tell us more and update the data set. Sonia, over to you.
Thanks a lot for that. So there are some big trends that we noticed in the month of October. One of them is that a lot of these premium companies have done exceptionally well. Now, M&M's auto sales were very strong this time around because of the premium SUVs that have done well. But it's the tractor sales that really stood out for me. Record high tractor sales for M&M, indications that the rural markets are coming back to normalcy. Talking about premium sales once again, Eicher Motors reported a record high Royal Enfield sales this time around, a good improvement even on a month-on-month basis. TVS Motors saw a sharp surge in the electric vehicle iQube sales, which have done exceptionally well for them. And Tata Motors has reported a 158% year-on-year growth in electric vehicle sales, which led to a good jump in the passenger vehicle sales for them, which was a 33% growth. So that's the big takeaway, that the premium end of the market is doing very well. On the flip side, there are still some problems in the two-wheeler space, especially with two-wheeler exports and some of those that have presence in the rural markets. Hero MotoCorp, for example, the total sales were down 17% year-on-year because of, the rural markets have not returned to normalcy in the mass market segment. And Bajaj Auto still facing some problems as far as exports are concerned. Exports are down 31% year-on-year, and the management indicated that it will take a few more quarters before normalcy returns to the export market. So that's the big takeaway, really. The premium end of the market continues to do well, while exports and the rural end is still sulking.
All right, Sonia, thank you so much for making sense of some of these auto sales that came in yesterday. With that, let's move on and talk about LIC Housing Finance delivered a weak set of Q2 earnings. Abhishek Kothari is here with all those details. Abhishek.
Well, the big missing point in LIC's result was the net interest margin coming in at 1.8% versus an estimate by Kotak Securities of about 2.5%. So the net interest income in itself has declined by almost 28% on a sequential basis. Just to put the number in perspective, net interest margin was at 1.8% when compared to 2.54% in the previous quarter and about 2% in the same quarter last year. Interest income has declined by 3.8% sequentially sequentially. This is despite the fact that disbursements grew by 10.5% on a sequential basis, and there was an AUM growth of about 2.6% on a sequential basis. So the PNL, both in terms of NI and PAT, has been below our poll. PAT has come in at about 305 crore. We were working with a number of more than 830 crores. Morgan Stanley has written on LIC Housing Finance, wherein they have an underweight rating and a target price of 375 per share. They say that, the PAT is 70% below their own estimate, driven by the fact that NI miss was about 34% from their own number. So provisions were 72% higher than Morgan Stanley's estimate, and loan growth was in line with their estimate, given the fact that, home loans grew by 15% on a YOY basis. Back to you.
Okay, all right, Abhishek, thanks very much for that. In fact, the LIC Housing Management is, however, positive on recovery. They said that there should be a sequential recovery that you should probably see in the numbers, and for net interest margins probably inching back to 2% versus 1.8%, which they reported in this quarter. But there's another disappointment this time round within the broader market numbers. Jubilant Fertilizers, that stock is down around 5% sharp worsening in terms of margins. Sonal, tell us more.
Well, a couple of reasons why this happened this time around, but running you through the numbers first. Revenue growth was strong at 92% on a YOY basis, but EBITDA declined 40% to come in at 445 crore rupees, leading to a margin decline of 1100 basis points and a profit decline of 45%. Now, as I said, a couple of reasons for this margin decline. There was a one-time margin loss in PNK Fertilizers to the tune of 240 crore rupees, and this was because of a couple of reasons. First, there was substantial increase in prices of imported fertilizers. There was a negative forex impact because of that, and there were some losses on DAP subsidy which were carried forward from the last year. Additionally, there was also working capital pressure because subsidy payments were delayed for the company, and this also led to a 60 crore higher interest cost for the company this time around, leading to an impact on profitability as well. This is about numbers. Company has also made an update on their expansion plans on technical ammonium nitrate project, where they will be increasing capacity by 20,000 tons to 2.4 lakh tons per annum, and revision in the estimated project cost is also there, upwards of 500 crore rupees to 1645 crore rupees, and the project is estimated to be completed in next 34 months. So there is an update here, but definitely Street has not liked the numbers, and a sharp fall in the stock price is what we are seeing today.
Okay, all right, Sonal, thanks very much for that. So that's on Jubilant Fertilizers at the low point of the day. For the markets, there's a little bit of profit booking which is seeped in. Nothing to write home about, still in tentative position, wait and watch in terms of what the Fed could report. Time for a break, but we will talk technicals. Pritesh Mehta of Yes Securities will join in next. Stay tuned.